2016 has been a year full of surprises and volatility. And we saw a number of global events happening which impacted markets. Those events included Brexit, it included oil prices falling sharply, it also included Trump winning against odds, uh, bringing in a new thought process into the system. On the domestic side, also we had a lot of events happening, right from GST being passed after a number of years of efforts, surgical strikes into Pakistan, as well as the demonetization that was triggered off in November. So in a situation like this, what should investors do? Clearly, investors need to be prepared for volatility in this coming year as well. We expect it to be a volatile year. Hence, we think that investors into equities should invest in a phased manner, possibly systematic investments can be a mode of investing. The second is that I think gold is another asset that we believe will do well in this coming year. So you can have gold in your portfolio, and that will also help reduce the volatility if you have equities as part of your portfolio. I think debt as well as part of your asset allocation. So it's important to keep your asset allocation, be a disciplined investor, do not get too carried away, frightened by market movements. And we believe post this year, we are pretty bullish on the markets going forward, and hence any market volatility can be seen as an opportunity to see good returns if you look at it from a 3-year perspective. This year we also expect lower interest rates. Already interest rates have come down. Fixed income instruments are not going to be the most attractive in this coming year. So what do you invest into on the fixed income side? Probably, maybe corporate bonds, which have not yet fallen as sharply as, let's say, bank fixed deposits and other investment avenues. On the mutual fund side, where you want a little liquidity, corporate bond opportunity funds. But you must keep in mind that while you invest in such instruments, do not take very high risk. Ensure that you are looking at the credit rating. Don't go for very poor quality instruments, because you may just end up losing your capital if you go for very, very poor quality instruments. Mid-cap funds have been a clear outperformer in 2016. So what do we expect in the coming year? We expect mid-cap funds to take a bit of a breather, and in a volatile year, normally you will find large-cap funds do better. So for the coming year, definitely if you have mid-cap funds, they may not perform as well based on our expectations, unless markets get again into a bull market phase, and during this year, in which case you can see mid caps do okay. But our view is that we possibly will see mid caps not perform as well. Real estate has been a favorite in investment for most of us. What happens with demonetization? I think as an avenue, real estate will still be a stable investment, and one believes that it will still be liked by Indian investors. However, a lot of unaccounted money used to flow into this space, and with that getting choked a bit, maybe one area of demand will sort of come down. So you may find that it may not do as well as what it used to do in the past. However, one of the benefits of demonetization is that interest rates will further come down, maybe come down more than what we expected it to come down, and that should again create a new wave of investing on the real estate side, as people, when they see lower interest rates, they may just say, okay, let me go and take a loan and buy my next property. What is the advice for investors on the tax saving side? Considering that we believe that a 3-year perspective is good from an equity market point of view, we think ELSS funds are definitely the best place to invest. However, if you are able to do it, ideally do it in a phased manner, so that you're not, so that you're not being out of, let's say, when market volatility, not impacted by market volatility as much. And what is the expectation of the union budget? Actually, I wouldn't call it an expectation, but I'll say maybe what can I hope of the union budget. I think one hope is that let's say tax rates come down, okay, as a follow-up to the demonetization. I think with a focus on adding in more taxpayers and getting people to be more compliant, I think one step in the right direction would also be that we lower tax rates, and then compliance also is much better. The other hope that I have is that we don't see additional taxes coming on equity, and already keeping in mind this year could be volatile. We believe that it may not be the right time to also add any taxes on the equity side. So thank you and have a great year, and wish you all the best in the year 2017.